Hi, everyone. We're going to get started in a couple of minutes. We have over 700 people that have signed up for today's session, so we just want to give a little time for people to log in. And just so you know what you've logged into if you are on the call so far, this is the third part of the Keeping Your Business Together in a Crisis live stream webinar series. We are calling this one The Big Picture. And the reason that we switched it from adapting your business to the big picture is we're trying to stay current and trying to be a little nimble with what we present each week. We're going to keep these webinars going on Wednesdays at 10 o'clock, picking different speakers and different conversations about what we're facing each week as we go through this. So we do want to let you know that we are one of 15 SBDCs in the state of Colorado, one of 1,000 in the country. Our center is hosted by the city of Boulder, and so we're always very grateful to our hosts. We're part of a network of local, state, and national strategic partners, and all of us can help you during these challenging times. So again, we are trying to do things that are current and relevant to your needs for each week. This session is being recorded on Wednesday, April 8th at 10 o'clock, and I always put that caveat in there because things have seemed to change by the day, the week, and the hour. So what we say today, there might be some things that we learn more after we hang up, and that's just the way that things have been rolling. Please note that everyone is on mute, and we'll stay on mute. We'll take chat. We'll take questions in chat at the end, and Jamie will do a Q&A for the last 30 minutes of this session. And we will send a link to the recording for this webinar. We also have all of our webinars posted. The recordings are posted on bouldersbdc.com, so you can watch them there. So we'll just, let me see, we'll just wait a minute or so, and then we'll get going. If you're on the call and you have some questions that you dialed in and you wanted them answered, you can certainly in chat send those to Jamie also while we're waiting, and that way you're top of mind, top of list. We definitely want to make sure that we help everyone we can. And if we don't have the answers for you today, we will find those out, and we're happy to send that information to you. You send your email address. So we'll get started here in just a minute. Also, I'm going to mention while we're sitting here, because dead silence is, there's no need for that on a recording. So if you have some ideas of topics that you would like us to schedule in our programming, things you want to learn about, or conversations that you'd like to have, then go ahead and put those in the chat as well, and we'll take a note of those so that we can pull some resources and schedule some follow-up sessions based on that. So I think I'm going to start off by introducing our panelists today. We are fortunate enough to have Sharon King. Sharon's the executive director of the Boulder SBDC, as well as the SBDC statewide Colorado TechSource program exec director. She's had several businesses. It's funny because all the SBDCs were all entrepreneurs at heart. So we've all had our own companies in the past, and Sharon certainly has had a few herself. She's also on a lot of the state committees, which is great because she's got firsthand knowledge. She is on calls every day, and we're always trying to get you the most the most up-to-date information we can. So we're really lucky to have Sharon on the call. And then we have Dan King, who's an entrepreneur and he's also a Boulder SBDC COVID-19 subject matter expert. And we're really grateful to have Dan on the team. He has been doing a ton of work, and his background is also banking. He has a finance background, and he's also going through this process, so he knows what it feels like to have to sit on those 1-800 calls. He knows how to, you know, he's living it and he's sharing it. And so we want this session to be different. If you are interested in learning, like, at a granular level about the PPP program, the Paycheck Protection Program, there are some really good webinars that we're providing through a state network with the SBDCs, and you can certainly listen to those. This session is more high level. Let's kind of cover what are the cards in our hand? Like, what do we have to work with, and what does that mean for you and your business? We're going to do some scenarios. So hopefully when we bring up some of these different options, they'll be relevant to you, and maybe you can mirror what we're talking about and apply that to your business. You, again, are welcome to ask some questions to Jamie while we're talking, but because our consulting is confidential, we're getting a ton of calls, and we've kind of gathered as a team to say, okay, what are we seeing, and what's the best advice that we could give right now with the programs, with the SBA programs, the CARES Act, unemployment, and, you know, what's real to you. So that's the kind of setup that we're going to do today. And before we start, I just want to kind of address the elephant in the room. Nobody's received any money yet. And part of these conversations have to do with time and cash. And so we've all been on a lot of calls and a lot of panels, and it came up yesterday in a conversation where it was like, has anybody gotten any money yet? And the answer was no. No one's seen any cash in their wallet. So Sharon and Dan, do you want to say something about that before we begin?
Yeah, I'll jump in, sure. So, I mean, there's a lot of people that are working very, very hard on these programs. These are massive undertakings. Obviously, this is a unprecedented time, and the level of support they're trying to push out is unprecedented too. And they're doing it through systems that aren't built for an unprecedented event. So people are working very hard. People are backed up. I wish I could tell you exactly when that log jam is going to break and my first client will see their first $10,000 deposit or some amount deposit, but I don't. I just do know there's a lot of resources being applied to it, and people are working really hard. And we're just going to have to hold our breath and get through until the money can actually hit our accounts.
So I guess what I want to say from a personal perspective is that I've worked with the SBA for a long time. I've worked with many, many lenders. My heart is with you, the small businesses, as are ours. I think the intention is for this to happen. And I know that people are not acting like government workers in any way, shape, or form. They're working around the clock to get this done. I think we have to just let this take its course, and I really do believe that it will work. So I'll start on the positive.
Thanks, guys. So again, I just wanted to bring it up before we start the call, because that would be my question. And it would be one of my first questions, is when am I going to see these, especially the EIDL advance cash? So thanks didn't want to call you on the spot, but thank you for talking about that. So we'll start the conversation with, again, what are the cards in our hand? What do we have to work with today from an SBA, CARES Act, unemployment opportunity? We're going to start with Sharon talking about EIDL and PPP. So Sharon, you want to take it away?
Yeah, sure. Okay, so I want to just kind of zip through this because, as Susie said, we're not trying to drill down in any one of these, but we need to set the table because that's kind of where the conversation is going. So the tools in the toolkit that we're going to kind of talk through are the EIDL Advance program, which can turn into the EIDL Loan program, the PPP, Paycheck Protection Program, employee layoffs, and they can be job attached. And Dan's going to talk about that. And then there are really a large number of other programs. There are SBA Express Bridge loans that can be extended. There's a lot of other things that are available. We're probably not going to go into those today. There's a lot of private and nonprofit initiatives that are happening. We're not going to go into those today either. So just really fast, the EIDL Advance, what we're calling the EIDL Advance program, that's a grant. And I'm taking a little leap here saying that, but you can apply for it. It's up to $10,000. If you don't get the EIDL loan, it's a grant. If you do get the EIDL loan and choose not to take it, it's a grant. So we're going to talk more about that. It's simple. There's a screen-by-screen how-to that we have. Theoretically, it's quick, and we'll hope that gets quick pretty soon. It'll direct deposit into your account as soon as this thing flows. And it's going to provide a small amount of operating cash with a broader usage than the PPP program that we're going to talk about. The EIDL loan, what happens is you apply for the advance, and then you get contacted by the SBA Office of Disaster Assistance about the EIDL loan. It's the same application. You don't apply again. They contact you for more information. Okay, so that's the process. It will be a much higher amount, we hope, if you qualify. And it is a grant, but it's a grant at 3.75% if you're a business, 2.75% if you're a nonprofit. And so those are low interest rates. And there's a fair amount of flexibility on how you can spend the money. It will take longer, and there are personal guarantees on this. It's a loan. There are personal guarantees over $200,000. So something to think about. The PPP, so there are very specific uses, and that's because the intention of the program is very specific. It's to cover payroll, to keep people employed with their current employers. There is a forgiveness, which is how that turns into a grant. You have to spend the money the way they have stipulated, and we can help you make sure that you know what those things are. All types of businesses are eligible. All types of entities are eligible. It does go through a lender, so there's a different process, and there's a reason. I won't get into it now. Again, the beginning of this should be quick, and hopefully the money will be flowing soon. The terms are not a standard SBA kind of program, so, and they're really interesting. That's why I want to mention the interest rate is 1%. It's a 2-year term, but it can be forgiven, so it turns into a grant. As I said, you go through a lender. There are no personal guarantees. There's no collateral. I love saying these things. There are no fees by the lender, no fees by the SBA. There are no prepayment penalties. If it turns into a loan and you don't end up using the money in the way it's stipulated, you can pay it off. And the loan payments, if it turns into a loan that you don't have forgiven, can be deferred for 6 months. So it's really an interesting program. I'm going to turn it over to Dan to talk about employee layoffs.
And I'm just going to go in a little bit here to some of the big changes that have happened with unemployment with the CARES Act. Most of you probably know that traditional unemployment in the state of Colorado, if someone's laid off or loses their job, doesn't quit their job, but loses their job through no fault of their own, they're eligible for 55% of their average earnings as unemployment benefit. The CARES Act added to that pot. So now employees who are laid off or lose their jobs will get their 55%, plus they'll get $600 a week. Now, this $600 a week is a temporary benefit. It goes from now through July 31st, and then it's scheduled to go away. But essentially, if you do the math, that means that an employee who is making less than $57,000 a year will, for a temporary period of time, really receive more money on unemployment than they would have working. And that's just a math number that you should know. And that'll tie into your calculations of how you look at PPP and unemployment and make some of those decisions. The other thing I'll add about unemployment, there's two other things I'll add quickly. There is a mechanism if you're going to do this as a temporary layoff. So you love your employees, you want them back, but we're closed right now. You can do a job attachment with them, and it's actually recorded as a temporary layoff with the state. And there's some advantages for both the employee and the employer to do it as a job attachment, but it keeps your employees closer to you. So it's a valuable tool to know about if you go down that path. Finally, unemployment with the CARES Act is going to be available for 1099 wage earners and sole proprietors. The final rules on how that program will be administered have not been released unless they came out this morning. But it is going to be something that's eligible for the 1099 wage earners and sole proprietors can apply for as well.
Great. So we're going to get into scenarios, but and guys chime in, but I do want to say before we start that if you apply for the EIDL loan, you can still apply for the PPP. You can apply for unemployment. Do you guys want to comment on that in the beginning before we start the scenarios? Apply for everything.
I mean, you really should. So that we're, we haven't gone into the details because we think most of you have heard it, but we can get into some of those details if you want. But all these programs, we're going to go through some scenarios, and we're going to kind of advise you that some of them are going to be better for certain types of businesses than others. But getting in line in the application is good for everybody. The only thing it's going to do for you is give you options that as the process unwinds and you actually get the loan approvals or get the PPP approvals, you'll now have an option in your toolbox. Your underlying business strategy and business plan is going to help you decide whether you can take that option or whether it makes sense to take that option. But if you're not in line, you're not going to have the option. So we do advise everybody to start the process, get in the queue, get your data together, and then you'll have some options in your quiver for later on.
Sharon, you want to add anything on to that?
No, only to say that I know I'm repeating, but you can apply for the EIDL advance and you can decide not to take the EIDL loan if it's offered. You can apply for PPP, although if I'm a lender and I'm putting the time in to work with you, I'd like to know that you're serious about it, but at least you can have a preliminary conversation going into that and make sure that that really you understand how much some of this is running the numbers for each one of you, and it will be different for each one of you. So again, I'm just reiterating, you're going to have options if you go with all of them.
Great. Awesome. Okay. So let's get into the scenarios. We're going to start off with, think of a small retail shop that has one full-time employee and several part-time. They're an LLC. There's no retail revenues during the stay at home, but they might be doing some things online, like selling a few things online. There's very little work for the staff to perform. And after the crisis, the restart's going to be a little sluggish. So what do you recommend for this small retail shop?
So we have our toolbox. We have the EIDL advance, the EIDL loan, the PPP, and then unemployment. And there's, again, some other ones that Sharon's mentioned. But let's go through them. So the EIDL advance is the easiest one to apply for. It's a form that'll take you 15 minutes to get applied for. And if you are approved, you will get up to $10,000 in the form of a grant. So for this business, that's a great thing to have. I mean, if they can get some immediate cash money, they can put that money in their bank account. There's not a lot of limitations on how they can use that money. It's very flexible. So they can use that to pay their rent for a couple months. They can use it to help them restart the business when they want to get to that point where they can reopen the doors. So it's very flexible, and it's a great option for them. The EIDL loan may be of value to this business, but it's really going to be based on their business plan and their business strategy for how you come out of this. The EIDL loan, there are some limitations on it. It is a working capital loan. It's meant to cover normal operating expenses. So this could be used for helping them ramp back up when they need to ramp back up to open the doors, do those sort of things if they need to relaunch their business, maybe some additional marketing. It's flexible money that could be very good for them. It is in form of a loan, very favorable terms, but it's a loan, so they'll have to pay it back. So it's really going to be based on their business plan, how they think they're going to get through this and how they think they're going to reopen, but it could be a really valuable financing option to have. It's better financing than you're going to get anyplace else. We get to the PPP for this business. So this is a business that doesn't have a lot of employees and really doesn't have anything for the employees to do for the next 2 months or however long the stay-at-home order goes on. Right now it's 1 month, but maybe it goes on a little bit longer. So there's not really work for the part-time employees. We're sure the owner has plenty of things to do, as owners always do. But the PPP is probably not the best fit for these people. For the PP, you have to maintain payroll and maintain full-time equivalents as you go forward. And frankly, those part-time people aren't going to have much to do. The better option for this business is probably to work with their employees. If they want to get those employees back, make sure they do a job attachment with them, talk to them, explain to them that right now, for a couple of weeks, they're going to be better off on unemployment because they're going to be able to take advantage of some of the enhancements to unemployment. So work with your staff, and unemployment is probably a better option for this business than the PPP.
Okay, well, I'm going to disagree with Dan.
That's what we're here for.
That's what we're here for. So, and I mean, some of this is fundamentally, the government has created these programs, and some of them are to keep people employed and to get money in their pocket. And they've created a couple of programs to do it in different ways. And I think, I'm only disagreeing with PPP, by the way. PPP, an employee, you can either lay off your employees and they can get money that way, or you can, as a business, file for PPP and keep your employees on your payroll, keep their health insurance intact, keep them. It's not that dissimilar from job attached, but I think that it does show some loyalty. They both show loyalty in different ways, let's say it that way. So I think, number one, this is a case of, I think you may, I've heard of businesses that have asked their employees to go keep them on as employees and have them go volunteer their time. So yeah, there may not be anything for them to do as a retail store. Maybe they come up with something creative, and Susie will do that on a whole other session. But I think that this is a channel, and PPP could be a really interesting way to go. I don't think that by doing the unemployment job attached, let me say it as a positive, you are showing loyalty to your employees if you're doing it as job attached. I just think that a business has to decide for themselves. And I think those are both routes to go.
And at the end of the day, I'll agree. This is where SBDC consulting comes in, because it really, the final decision is going to be the business owner's decision. You know your business, you know your employees, you know what's going to be best for them better than we do. And we're going to help try to let you evaluate the tools and give you feedback, but ultimately it's going to come down to the little details that only you know.
Sometimes the best role of an SBDC subject matter expert is to listen and be a sounding board, and to let people actually play out all the different scenarios. And yes, give them feedback, but as you said, Dan, you're the business owner. You take the risk. You get to make the decision. The one thing I do want to say that I think this is going to come up in each one of these, it's really important to create cash, to create a contingency fund, because there's so much uncertainty here. And so the idea that Susie had said originally, and Dan reiterated, the idea of go after all of them, go after everything that you can, and see how much you can put together just as a contingency fund to see what you're going to need. If you have a loan, you can pay it back with no prepayment penalty. Like, there are many positives in this. Yeah, I'll leave it at that.
And I'll just throw in, that's particularly true for the EIDL loan. If you get your approval on the EIDL loan, you have 6 months to execute that approval. So again, you've developed yourself an option. You have a source of financing available. You don't have to take it right away. I mean, all of us, I think, none of us can tell anybody exactly how this is going to work out, exactly when the sun's going to shine again and we're going to go down to Pearl Street. But it's going to happen, but we don't know when or exactly how that will transpire. So having an option is great. So again, completing the application, we think, is perfect for everybody, and then you'll have to decide whether to execute or not.
And just as a clarification, because I know that in this particular scenario where they had several part-time employees, and I know that we have another example where they might have, again, some part-time staff, is when you're applying for the PPP, are you counting two part-time as one employee? Do you want to just address that? Or I know that it's come up also that, yeah, like, do you want to cover that, Dan?
It's full-time equivalent. So, you know, a 10-hour employee a week is a quarter of an employee. And you already, what they're going to look for is in the PPP program, the banks are expecting you to provide the documentation for what you're saying is your payroll and what you're saying is your full-time employees. You have that number on the 941 forms that you file on a quarterly basis. You list the number of employees. So that's going to be the basis against which the measurements are going to occur later on, or whatever those documents are that you use for your support.
Great. Okay. So our second scenario is we're going to use a small innovative aerospace company as our example. So in this case, they are they have research and development contracts from the government. They have highly skilled and trained staff, which we all know it's really hard in good times to find good staff. And now, of course, we want to keep those staff so that we don't have to start from scratch when we go back to the new normal. They have the staff. There's critical tasks that must be accomplished during the stay at home. So the business still has to function in some way. They are an essential business. They've found a way to do some work in the labs. It's a relatively high pay scale, so it could be those jobs over 100,000, certainly. And revenues may be delayed or threatened due to COVID disruptions to grants, supply chains, and procurement. Okay.
So this is a very different business than the first one we're considering. Again, pretty much the EIDL Advance, we're going to say, is a good thing for anybody to go after, but it's going to be a drop in the bucket for this business. $10,000, if they get the full amount, is not going to go very far. An EIDL loan, a full EIDL loan, you can get up to $2 million in financing. I mean, you have to qualify, and there's credit checks and there's criteria that you have to go through to qualify. So not everybody's going to get the EIDL loan or the EIDL Advance for that matter. But if they can have a good business plan together, that they can figure out what they think their cash needs are going to be, the EIDL loan can be an excellent financing vehicle going forward. Again, none of us can really say what's going to happen to the traditional finance market for the coming periods. Are investors going to dry up and not be willing to put money in? Are banks going to dry up and not be able to put money in? So really doing a plan, really looking at what they think their needs are for the next couple of years and how an EIDL loan could help them through that is going to be a really valuable tool for this firm to have. The PPP, the Paycheck Protection Program, is going to be a perfect match for this company. They have highly skilled workers, probably making good wages. They need to keep the ball rolling. This is a development company that has projects. they can't just take a month off. We're going to assume they're essential business or they found a way to work from home, but they need to keep the processes rolling because they're producing a product and they can't turn it off for 2 months and then start it up easily. They also need to keep those individual employees. They have a lot of money invested in those employees. The people have a skill set. It would be very difficult to lay all these people off and then think that when the light comes back on, you're going to go out and replace them with the same quality and the same trained, skilled staff. So the PPP program is going to be an excellent one for these people to go into. And unemployment is going to be a bad one for all the same reason PPP is good. You can't risk losing the staff. You need to maintain the staff. For these people who are making a higher level of income, the CARES Act enhancement of $600 a week isn't going to be as big a carrot. It's not going to mean as much to them, so it's not going to be as relevant to the discussion. So that would be my general advice for this company.
Sure.
So I'm just going to jump in a little bit on the idle loan. Everything that you said, I agree with. And I'm going to say a little bit that I'm probably I know enough to be dangerous on this one. We worked with the EIDL economic injury disaster loans during the floods in 2013, and it took quite a long time to work with all the companies. Number one, it's an economic injury loan, and so you're basically, the amount that you will get is basically based on the case that you make of how your business is injured. Now, your business is injured. I mean, that's not the issue, but it may look very different than what the retail story was. So that's number one. And we've got specialists that were working with us during the flood and are still working with our companies. The other side of it is, I believe the CARES Act has made a big change in the criteria that is being used to evaluate businesses in all of these programs. And we're learning how stringent it is and how much it's let off. As far as, I'm not going to say it's loose, but it will be less stringent. But when it comes to the EIDL loan, especially, you still need to show them that you are going to be a viable business after the pandemic. And we know lots of small, innovative aerospace companies that we work with. And we know that that case can be made. Sometimes the case is, you need a lot of ammunition to make your case, but it is a case that you're making. You're going to end up, there's going to be a Office of Disaster Assistance person that reaches out to you, asks for documentation, and really tries to understand what's going on. And that's when you pull it together and you let them know you are a viable business and you have gotten these things before and they are continuing, and maybe you get letters of support. There's a lot more detail that goes into this, but I think those two things are important, especially for the actual EIDL loan. But on the other side, you can put quite a lot of money in a contingency fund that may be really important as this moves forward.
Yeah, that's an excellent point, Sharon, and probably wasn't clear on my answer. The EIDL loan is intended to be a working capital loan, so it's not a traditional loan where you can say we're going to open up a new product line next year and we need to go out and buy a new factory. Those are not going to be qualified uses of an EIDL loan. It is more based on damages, what impact this has had on your business, and you're going to have to demonstrate that. So it does have limitations in that regard.
Okay. So now we move on to the self-employed 1099 artist. And you could be an artist. I mean, we are based in Boulder. There are people from all over the state that have called in to this call. So Colorado has a lot of artists that think of, you can also think of if you're a consultant or, basically a self-employed 1099. There have been a ton of questions about this. So in this scenario, it's someone that receives payments from galleries and individuals on a 1099 basis. They've established revenues from these sources, so they can show that they've they've gathered revenue over the years. No staff. The overhead is limited to maybe a studio or a private residence, and they could be a 1099 or an LLC.
Well, I'll start with the good news. The good news is that all of these programs are available to 1099 wage earners and sole proprietors, which is a change from the past. So these options, the doors are all open. Now, whether they'll fit or not, we'll look at. So the EIDL advance, again, we're going to say that's good for everybody. You know, it's really as a grant. Again, it's a small amount, so how far I'll get you. But for this person, it could be just the additional cash infusion they need to get through this rough period until things start up more normally. The EIDL loan is going to be really a business decision based on the expenses this person incurs in their business, based on what their overall cash needs are, and what they think they might have to do to come out of this period of time. So it's an available thing. We would, again, urge you to start the process, get in the queue, and you'll do that by doing the EIDL advance, and then put your business plan together, look at your damages, and look at how would I really use these funds. Does it make sense for me to take on a loan? And will this be good for my long-term prospects? The PPP money, again, the business is qualified, and it could be a source for you to replace your earnings in the interim, but you can replace your earnings through unemployment as well. So it's really going to depend on what that level of income is you're trying to replace for a period of time, and the individual circumstances of this artist to decide really between PPP or unemployment.
Yeah, I agree with all. You know, it's hard with these scenarios because there's so many different flavors of artists, and then we're using the artist as one example of a self-employed individual. And I think it goes back to when you get down to more detail, there may be some things inherent in your situation that really answer the question pretty quickly of which direction you want to go with.
And I'll add in there that there also may be some things that come out in the rules which we haven't seen for some of these yet. For the PPP, the lending window opened last Friday, and that was specifically for pretty much what I would call traditional businesses. The program is, through the act of Congress, is going to be eligible and available to sole proprietors and 1099 wage earners. The lending window for those people is not supposed to be until this Friday, and the underlying rules and some of the details are still being determined and haven't been published yet. So the devil could be in the details, but the individual should at least know this is going to be an option for me, and I should make sure I explore the option, see if it's going to work for my particular set of circumstances.
Right.
Okay, so I'm going to hold on the massage therapist example and do the seasonal work, the seasonal workers, because that, you know, it's a beautiful day outside, and so I'm thinking of fresh produce, so that makes me think of the farmer's market, and it also makes me think of summer camps and outside vendors on the Pearl Street Mall, you know, parks, things that we don't know when we might get back to that kind of normalcy. Day camps. For these companies, most of their money is basically built up in a short period of time, really starting soon, if not now. So, and again, we don't have the answers to when we're going to be able to get back into groups of these sizes. So, what advice do you have for these types of businesses?
So again, be at the EIDL advance window, start that process. If you get some grant money, it gives you some money to get you going as the season approaches, whenever the beginning of that season happens to be, which may be a different date than you're used to in the past. By starting that, you'll again have started the loan process, so you can put your data together for that. But whether you execute that loan or whether you take that loan are going to be based on what are still to be evolving business environment. when you have the approval, what's it look like? When is it going to make sense for you to open those doors and start spending the money to capture whatever part of the season may still be left to capture? The PPP may not be a great fit for these people. Again, I'm making an assumption that they don't really have a payroll at this time. They have a very limited payroll at this time. So they're not spending a lot of money on payroll because their payroll is really seasonal and won't kick in until they reopen the door. So again, you have to do careful analysis depending on your own situation, but it might not be the perfect fit. And probably unemployment, I don't know if they don't have a lot of staff on, so I'm assuming they don't have a lot of staff to lay off at this point. So whether that's a really big decision for them or not depends on their circumstances.
Yeah. So again, every situation is going to be different. So let's look at the summer camp. They probably have people on staff now that are in the planning stage, and so that will be some payroll. Obviously, it will ramp up once they get into their full season. So I think there is a discussion for PPP and for unemployment there. I'm hoping that some of those things can be done remotely, and maybe they won't need to do that, but let's continue. I just want to call out the idea that for PPP, the calculation is you're looking at this time this year against this time last year to look at the economic, to look at your payroll and what the difference is. And I think that for a seasonal business, there may be similarities this time this year to this time last year. They may, so I guess what I'm trying to say is the solutions they're looking for may actually match the situation they're in right now. However, these are also businesses that may be putting in place all the revenue that comes, revenue comes in advance for the summer camp. So the economic injury could be happening because of the uncertainty in the market. And that could be a very strong reason to go after the idle loan, because that is the economic injury calculation. Because of what's happening in our world, people are too uncertain to actually sign up for summer camp. And therefore, the revenue is not going to happen. So it may be something that really, I think, kind of moves you into that direction for that tool.
That's good. That's good. So what's the best advice that you can give to a small business owner right now?
Get in line. Really, some of these forms are very easy to do. And I don't think any of them are burdensome. In fact, I think even the full idle loan application is not really hard to do. It requires basic information on your business, which you should be able to put together. So again, develop your options and have options available to you, so that again, we're all predicting the future and none of us really know, but as things develop and we can predict with more certainty, you have available resources.
And then just to piggyback on what you're saying, Dan, if you don't have these pieces in the puzzle, your financial statements, your documentation, if you don't have that pulled together easily, this is a really good time to do that, because you probably have more time now than you would have with a fully operational business. So if you need help, we can do that. I know some businesses have been talking about long-term planning, because now they can work on their business as opposed to in their business. People are looking for the silver lining here, and I think that's a very legitimate way to use your time right now if you can't move your business forward. So I go back to create cash. I think that in all the different ways, and there are many more than we are talking about here today, but I think if any business can look to create cash, obviously reducing costs is really important, and that's a subject for another session, which I think Susie already had. But creating cash and creating a contingency is pretty critical and can help this go through. Susie, is this your what are the biggest tips question? Or is that coming later? Okay.
It was just like the top advice that.
What's the one thing? Okay, so I know that we're all in the thick of this right now, and nobody knows what's going on. But I think it's really important to think now, and we're just starting. Even the talking heads in the media, we're just starting to think through what could this possibly look like in July? What could this possibly look like in September? Yada, yada, until we have a vaccine and maybe the world goes back to the way we saw it before. I think it's time to actually think through what you want your business to look like. And in some ways, you may not have control over that. It goes back to what is it that we can control here. But in general, if you think about what you want your business to be at those points, I think maybe you can start thinking about how you can get there. And it may not work. Any plan is as good as the moment you make it. But I do think that it's worth the struggle to think through it and find all the different resources. Obviously, everybody said that. But also think about whether you have to change your business model a little bit for a time, for good. I mean, I think now's the time to actually think through the whole thing. You may not be ready this week. I don't think we're ready this week to have all those conversations. And it's not that we have these answers, by the way. Let me say that. But business owners are pretty smart. They know their own situation. And I think starting to talk with each other, with whatever guidance you can get on these things, I think now's the time. My 2 cents.
So I'll chime in as a previous business owner myself, and I would say keep good records. So I was on a call yesterday, and the business owners on that call were so smart and so put together, and I was really impressed with the fact that they had things in order. I know that I had a marketing and design agency, and when tax time came, I was always like, I always had an accountant do everything for me, but I also, you have to gather those records. So what you're spending your money on and that you have to answer for, maybe it's, tax time next year or the next time that you do your quarterlies, or paying that, explaining how you spent this money with the PPP or just as an example, I would just say keep your records on what you're doing so that that's not as painful when you have to answer for the spend, especially for the forgiveness piece of the PPP loan. And I would also say breathe and give yourself a little bit of a break. Make sure that you're doing something for yourself, or maybe doing something kind for others, but to also breathe. There is a lot of fear of there's not going to be any money. I was too late. I don't think that you're too late. We wouldn't tell you to go apply for these loans if we felt like it was a futile effort. So I would say breathe and keep good records. Those are my 2 for the day. Jamie, you got one? You got some advice?
Oh, me? No, I think you guys have summarized it well. Were we saying Jamie or Dan?
I said Jamie.
Okay, good. Jamie, good. I think I'm good.
I want to give a shout out to Jamie because she has been manually entering everyone on these calls. So this is, again, the 3rd of this series, and she's had to manually enter everyone into GoToMeeting to invite them to this. She's also been the co-moderator for all of these, and she's that fierce leader behind the scenes. And so I just wanted to give her a shout out. And she's also consulting on our tech side and helping to call people and make sure that they're okay. So that's why I was asking Jamie if she had any a tip before we open the Q&A.
Yeah, I know there's a lot of questions right now. There's a lot of weighing decisions, and a lot of it is crunching the numbers and seeing what the best option is for your business. And I know it's a very challenging thing to do. I mean, a lot of you care a lot about your employees, and it's how can you keep them as part of your business, or do things to help them stay afloat for their own personal lives. So we're doing our best to help advise, but really they are kind of your own personal decisions for your business. But ask us for what we know, and we'll give you everything we know, but we're learning along with everyone else. It's just a lot being thrown at us at the same time. Things keep changing. So trying to stay on top of everything and get you the most accurate information. So still keep asking, and we'll get to you as quickly and as accurately as we can.
All right. Jamie, did you collect any good questions to throw at Sharon and Dan?
Oh yeah, we have a ton of questions.
Oh, good.
So I guess I'll start with.
I wanted to give a little more time for it, so that's good.
Yeah. So I'll start with one that's a little easier to answer. So it's about banks. So I know with PPP right now, a lot of people are concerned that big banks like Wells Fargo or others may not be taking on new applications or things like that. So one person is asking, if they don't use a major bank but they use a local credit union, they've been told that if they don't have a bank account there already, they won't be accommodated. I guess, what is the status of banks right now? What should people be looking for, and trying to get around that?
So Dan, I think I could take that. So this is going to be different for all parts of Colorado, wherever you're calling in from. But the SBDCs have been collaborating with all the partners in their area to try to find the banks that really are open to working with new customers. And John Taylor of the Boulder Chamber and now other chambers and economic development organizations in Boulder County are working with us to actually build a list. We contacted the lenders. I'm going to name a couple that we've been told, at least this was on Tuesday, that they were very interested and willing to talk to new customers. So Bank of Colorado, Citywide Banks, I'm saying it slowly, it's on our website as well. Community Banks of Colorado, Flatirons Bank. Flatirons Bank did a webinar with us yesterday, and it's really been a pleasure to work with them. Independent Bank, which you may know used to be Guarantee and is now Independent Finance, Independent Bank. Key Bank, Vectra Bank. Susie, you mentioned that this is not for my list, but you mentioned that in Longmont High Plains Bank.
High Plains.
ANB and US Bank especially has, and they've all indicated on our website if they have Spanish speaking representatives. For these programs, for this PPP program, nonprofits, 501c3s are able to participate. And so we asked them whether they know about nonprofits and are open to working with nonprofits. And so they answered that as well. That help?
I'll throw in a little background there too. I know that the Wells Fargo news hit everybody, and it seems that was a issue specific to Wells Fargo and some of the restrictions they have currently in place. But the Fed has come out and said that they're going to address the liquidity problem. They've said that they're going to backstop the banks on these things. They haven't said exactly how they're going to do it, but people know it's going to happen. I will also just share a little news from the field. So if you are a new customer, there's a couple additional things you're going to have to do with that bank. You're going to have to establish with them that you're an actual business. So if you have an existing customer, they've already checked out your articles of incorporation, and they know that you're legal to do business in the state of Colorado. So you don't have that additional hurdle. But as a new client, you're going to have to go through those additional steps. And the other thing I'll just say, unconfirmed, take it for what it's worth, just rumors milling out there, is that many people are finding it easier to work with the local community banks rather than the larger banks. And I think the reason is the rules that were established for the PPP were put out by the SBA, but the banks have to administer them. And the rules aren't detailed down to the last T and the last I. So each bank has to make their own evaluation of those rules and come up with specifically how they're going to ask for information and what those criteria are going to be. Obviously, smaller banks have a much smaller decision tree. It's closer to the ground here. Bigger banks are going to have to make a more global decision tree, and they're also taking on a lot greater risk because they're going to do way more of these loans. So that's something I've heard in the field. I don't know if it's true, but it's just feedback that's out there.
Just one quick comment about banks saying that they've reached their credit limit. I know that there are several different avenues that are being looked at now to alleviate that issue. So I'll leave it at that, no more detail, but if you're worried that the money's going to run out, we really believe that it will be repopulated and in several different ways.
Okay, so there is a question about timing that needs to be considered for the PPP. So, if they hired new employees in 2020, but, had less in 2019, it might not be representative right now of what they really need for payroll for, until June 30th. So I guess, how does that work with calculating the PPP and how they can do the timing with that?
Sure.
Let me start. I'm gonna say what we've been trained to understand, and then I think there's some things that have come up since then. There are several ways that we've been shown that the PPP can be calculated, and there's documentation on how to do it. We can walk you through the actual calculation. There may be an opportunity to talk to your bank, and I wouldn't say that it will change it completely, but you will have a different situation, and that, again, another vote for the community banks, the smaller banks. If you can speak to your banker, there may be an opportunity to explain your different situation and how you're being impacted. Dan, you want to follow up on that?
No, I'm going to agree with that. Again, the banks have to interpret these rules, and obviously the rules are one rule for a big world of different businesses that are going to have different circumstances. And the bank is going to have to interpret the rules for you. So you do need to talk to your banker about it. And have that conversation and see what you can do. I know I've seen, the time frame that you estimate your average payroll on. I've seen some banks that use calendar year 2019, but then I've seen trailing 12 banks. So you could capture some of that change if you report through the end of March to do your average monthly calculation. You won't get it all, but you will at least get a portion of that increase that you've experienced this year. And that seems allowable on most of the bank sites that I'm familiar with.
So there was also clarification that was wanted for seasonal employees as far as, the 8 weeks they should use for when they're, trying to request the money for this year. Does it have to be the exact same 8 weeks? Or what does that look like?
Yeah. I may not have it.
I may not.
You have it in front of you?
I do not. I don't think.
I think we should, rather than go out on a limb and give you the wrong period, I think we'll wait and follow up with that in the responses.
I was going to say that from the calls that I was on yesterday, was there actually an answer? Is there a black and white answer to that? Do you know?
Black and white.
Is there?
I have seen a different set of dates that they can use. I don't know them off the top of my head. I don't have them readily available, but I have actually seen a specific time period that they can use for the calculation of their average wages rather than a calendar year. So, but I don't know what that is.
So there are specific dates. There is a black and white answer, and then there may be more of a conversation to be had. I'll try to look for the dates while we're talking.
So I have a scenario here, which might kind of duplicate a little bit of what you guys already said, but let's just give you another one. So this one is a healthcare services business. They started with revenues in 2019. All staff is contracted as independent contractors on a production basis. This person works out of their house, but they have monthly bills for professional liabilities for malpractice and inventory expiring. This person had planned to start paying themselves in 2020. So they're wondering which programs might be the best fit.
Yeah, that's a hard answer. I mean, apply for the EIDL Advance. That's the first answer. But so in terms of PPP and unemployment, those are open for 1099 workers, but for the 1099 workers themselves. So a business, established business that pays people on a 1099 basis, they can't file on behalf of those individuals who are getting those wages. The individuals who are the recipients of those 1099 wages are the ones that have to file for the program and for unemployment.
I apologize. I can't put my hands very quickly on the dates for seasonal, so we'll follow up with that.
We can put that in the follow-up email if you get the answer. So everyone will get an email tomorrow, and we can put that information in there.
Okay, so this person is saying that they have applied for EIDL and PPP, and they're doing the work that they had paid an employee to do last year that quit in January. They weren't on payroll last year, but now are putting themselves on. So they're wondering if they can use the PPP money to pay themselves along with other employees.
I believe that to be true. The EIDL or the PPP doesn't specify that if Joe did the work last year, Sally can't do it this year. Obviously, they know there's been changes in everybody's staff. So I believe that as long as it's reasonable, it's got to pass the smell test at any event. And everybody knows about the $100,000 cap on salaries per year. So I won't go into too much details unless somebody wants more.
Actually, could you just say it, because I forgot to mention it?
So for the calculation of the PPP, if someone is paid more than $100,000, they can only include in their calculation of that amount up to $100,000. So if I was making $150,000, calculation for how much PPP money I can apply for, I can only count the first $100,000 of salary. Now I can also put in, so I put in that $100,000. I can put in my health insurance cost, and if I have different benefits and things like that, those can be added on top of that. But the actual dollar wages are capped at $100,000 per employee. But I would think that's acceptable if you're taking on that work. And again, if you're suddenly now going to pay yourself $100 an hour, whereas you would have hired the guy for $10 an hour, I think that may not pass the smell test. But I think if it's reasonable, it will be reasonably received, and you'll be okay.
I want to just reiterate that you can hire back. So if this person had laid off their staff, you can hire back before June 30th and qualify for the program. I actually have a question into SBA. So I'm going to tell you something that is a question I do not have the answer to yet, but we're getting the answer. The PPP has a time period that it is for this program. It's February 15th through June 30th. And my question was, we understand that once you get approved and you get the PPP loan and you start spending to qualify for the loan forgiveness, that starts this period of time. My question was, can you wait until a week before the end of the program, June 30th, apply and get the loan, and then your period of time that you're using the money actually goes past the time of the program? So I know this sounds very convoluted. Once I get an answer, and SBA has been very good about answering us very quickly. Once we get an answer, we'll post it on our website, frequently asked questions.
Okay, so this person just wants a little more clarification about unemployment insurance. So they have been qualified for Colorado Unemployment Insurance Workshare Program to get payroll support up to 40%. Will that conflict with their PPP loan?
Well,
Before you say that,
yeah.
can I just say one thing? So whatever happens in all these programs, we should have said this first. You can't pay for the same thing twice. And I think probably that's enough to say you can't use the same expenses. You can't make money on this. This is really just to reimburse you in some way. I'm sorry, Dan, I didn't mean to interrupt.
No, that's a good way to say it too. So I guess what I'm hearing from that conversation is that they've had a reduction in hours for an individual, and so the individual is collecting some of their prior earnings through the Workshare program through unemployment. And if they're going to now use I'm assuming their base for their calculation of how much money they want from PPP includes this person working full time. So that's going to be in their base. And if they get the award, they're going to be awarded the money as if that person was working full time on their payroll, not being paid by unemployment for Workshare. When they go to apply for forgiveness at the end of the day, they have to match how they spent those dollars with what their requests were. So if they've done things that have lowered their payroll cost below 75% of the award, they're going to get a reduction in how much of the PPP is forgiven. They're going to get a reduction in how much is forgiven. Now, so what happens if everything matches up and you get 100% forgiveness? Happy day, you don't own it anymore, the file's closed. If you don't match up and you've spent less or you haven't spent it exactly right, it's going to get converted into a loan. And it's going to be a loan with a 2-year repayment term. And my understanding at this point is a 1% interest rate. I would look for confirmation in that when somebody actually sees the documents, but that is my understanding. So it's not the end of the day if you're not perfect. You will have to pay it back. And if you actually have the money sitting in the bank, you can pay it back right then. Again, there's no prepayment penalties. So I hope that answers the question.
Okay.
And I would say, Sharon, before you jump in, I would say that just to reiterate your point, because I think that maybe we should have said it at the beginning, that there's no double dipping for anyone. That includes your employees. So your employee has to answer questions when they get those unemployment funds, and so they can't collect on your side also and then collect unemployment, and you can't use those funds that you get from EIDL or PPP or unemployment for the same purpose. So that double dip piece, I always talk about that and I forgot to say it, so I'm glad that came up. I'm glad that whoever answered the question.
Okay, so I want to jump in back in the middle of this little scenario. So you're on Workshare, you're getting a percentage, however this works. You get the PPP and you can hire back that person 100%. So basically you have met all the requirements of PPP and the loan can be forgiven. So you may not decide to, but that is one of the options that you have.
And the point about double dipping is important too. And it also is there's a relationship between the amount of money you'll receive from an EIDL loan and any money you may have received from a PPP. They won't let you double them up. And there's a longer explanation for that if you'd like to hear it. But basically, if you understand, if I qualify, if my damages that are qualified through an EIDL loan are $100,000 and I've already received $50,000 in the form of PPP, they're not giving me $150,000. They're going to give me $100,000 total. 50,000 in the form of a PPP, 50,000 in the form of an EIDL loan.
Actually, I want to hold off on saying that definitively.
Okay.
I have another question, and I'm sorry, this is my job, right? I have another question into SBA to ask exactly. Somebody got up to $10,000 from the EIDL advance. Now they're qualifying for a PPP. We know that these two sides of the SBA work together. They're going to ask, and their intention is not to give you both. So how exactly does it work? And that's a stay tuned kind of answer.
Okay, So I think there's more clarification that people would like about sole proprietors and LLC owners and how the pay would be calculated for the PPP.
The lending window opens on Friday and the rules have not been released. Unfortunately, that's the answer. The final rules or the interim rules have not been presented to the banks. Now, the banks will administer the PPP program just like they're administering the current one. So they'll be the ultimate interpreter of those rules, but we don't have it in front of us. So, you know what? It's going to be reasonable documentation is what you're going to have to assume. Obviously, 1099 wage earners are going to have 1099 forms that they've filed in the past and paid taxes on those earnings. Sole proprietors are going to have a similar net earning or however they take funds or draws. And they're going to have to document that to the banks. I will say that for the current round of funding that's out there, the standard seems to be for the banks is that the onus is really on the borrower to present truthful information always, and in this case, on the banks to make a reasonable determination if that information is sufficient or accurate. It's reasonable determination. They don't have to go to a higher standard of care than that. So the onus is really on you as a borrower to make sure that documentation you present is true and accurate and reflects reality. And if you do something that doesn't reflect reality, I mean, I've said before, if you don't spend all the money, it may get converted into a loan. But obviously, if you do something that's fraudulent, there's going to be more serious repercussions.
So we like to hammer things to pieces. We don't have, so the exact question that got asked, exactly how are we going to calculate this and what documentation, we're not going to do that answer now, but we are going to get that answer and put it up on the website. I mean, there's no reason for this to be a mystery. We want to be able to share that with you.
Yeah, and I would also recommend that if you're a professional services company, like let's say you are a company that provided consulting services or HR or you're a grant writer, whatever it may be, I would collect, see if, for those businesses that have paused their service, like maybe you were about to close deals and or people were going to renew their contracts with you, but now they're holding off because they're uncertain about what's going to happen. I would ask them for letters to say, we have paused, this was a potential $100,000, client, but we're holding off. So like collecting that helps you build a story so that when you are trying to justify your money, particularly for people that, are taking those draws, it just helps you to kind of define that disaster really has impacted your business in a certain way.
Okay, so there is concern, if you end up going out of business in 3 months and you qualified for PPP and you got the loan, what can you do in that situation?
I mean, PPP, there's no personal guarantees and there's no collateral. Now, obviously, if you've done something fraudulent, there's going to be repercussions, but there is no personal recourse.
Okay, yeah. If you know that you're closing your business, we hope that this is some aspect of this is the honor system, where, you can make a case to a banker that, what you've done in the past. If you know you're closing the business, I would hope, and I'm speaking for myself, not the SBDC, nor anyone involved attached to it, I would hope that you wouldn't do this. I think I need to go back to one of the pieces of this, which is why were these programs created in the first place? They were created to put money into small businesses to keep them going, to keep their employees, I think if you could honor that intention, you are one of the employees. Let me go to one other thing. If you're saying that you get a PPP, you use the money and stay open for the time you need to in order to get the loan forgiveness, so that's documented, then you've accomplished, it's unfortunate that you're closing your doors, but you've accomplished what the program is meant to do, which is to keep the people that work for you with receiving their compensation. I'll leave it at that.
Yeah.
Okay, so this one's pretty specific, but it is a massage therapist. So I know there's concern there about, getting back to work and, if there is a higher touch, what that might look like coming up here. So I guess, is there any advice you can give for businesses that are like that? And I mean, it's unsure what's going to happen in a few months.
Well, the first advice is the one that we've harped on all day: get options. And if you start the applications for all these processes, you're going to have options. And then specifically for if you do get an EIDL loan, you're going to have a period of time to just sit on that option. I think there was discussion about the next, or one of the future conversations of this program is going to be people speculating on what the new normal is going to be, and when that new normal is going to arrive. None of us know. Mm-hmm. And there's specific businesses out there like massage therapy that there's going to be longer term, changes in the norm. How the service is delivered, what other precautions do you have to take? I certainly don't have those answers. But if you do have these options in your quiver, then you can try to wait for some of those things to develop and become more clear before you execute on some of them.
And then the other decision, if you are the sole person in this, if you are a massage therapist, it's your business, you don't employ anyone, you're making the decision of whether to go on unemployment or whether to do PPP for yourself. And that's a numbers decision.
Okay, so this person is wondering if they can make changes to their application for EIDL. They said they didn't technically have any cost of goods sold and they put in $0, but they weren't sure if that was the correct input. So I guess they're just wondering if you have any advice for that.
I don't have a solution for you.
I do.
I have a number of different clients that we've been trying to get through to talk to somebody about specifics and have not gotten there. My expectation is at some point there's going to be a denial of your loan or an approval of your loan. And if there is a denial, there will be a mechanism for you to go back in and try to dispute that denial. And Sharon's raising her hand, so she'll talk about that. And if there is an approval, there's going to be a next step where they actually ask for more additional information to process your entire EIDL application loan, and that will be an opportunity to provide additional information and clarify things. But there's no call right now, I don't think. Yeah.
Just to reframe that a little bit, so we know that number one, you can't go in and just change your application. So don't try to do that. What we were told yesterday on a call with SBA is that the best time to explain what you did and why you want to change it is when SBA contacts you. So you put in the SBA EIDL advance application. It's very short. You likely, we hope, will get this advance, which is a grant. There will be some time period, and then you'll be in the queue for SBA to actually get back in touch with you and ask for more information. And that's your opportunity to say, okay, I didn't understand it the first time, it was not clear, here's what I really would like to submit to you. They may ask for documentation. And then to Dan's point, so that's the answer to the specific question, but to Dan's point, if you are denied, you do have 6 months to come back and submit additional information and ask for it to be re-reviewed.
Okay, so this person is saying
right now you just have to wait.
Yeah.
It's unfortunate. Right now you just have to wait for the process to unfold and get to you. Yeah, sorry.
Okay, so this person has 3 separate small businesses. So do they have to apply for each of them in one, or can they apply for each one separately?
So there is an issue of affiliated businesses. If those 3 small businesses are under one entity, then it all needs to go together in the application. And I didn't call something out, which is I'm really excited about, is that for restaurants and lodging, there is to be a small business by SBA definition, and we can help anybody who wants to figure out if they are. But it's, the commonly used number is if you have 500 or fewer employees. For some restaurant groups or small hotel groups, they may have more than 500 employees, but still be within the definition of small business. They fall into I'm sorry, I'm getting into detail here. They fall into the NAICS 72 category, National North American Industry Classification System. You look at your NAICS code, and if you're a restaurant or lodging, you'll be in this category. And so each individual restaurant can apply separately. But I think it's the only exception, and this really never happens with SBA loans. So this is a good thing for PPP.
Okay, so this person is asking if they can use funding for marketing when they reopen, and if so, which loan or grant should they apply for?
Well, so PPP is very, very limited. I mean, it's really for payroll and a couple other things that you might spend over a 2-month period. EIDL loan marketing is a normal business expense. I would think that you could.
Agreed.
Agreed.
Okay, so I think there's some confusion or interest in finding out what they should be using as calculation for the EIDL loan, how much time they should be asking for. This person is saying they've put together burn rates through June, but is that going to be enough? How long should they plan for?
So you
look like you want to jump in.
Yeah, you're submitting a loan application, basically, and it'll be based on your damages. What's your reasonable expectation? And a reasonable expectation for many businesses is this could impact next year. So it has to be reasonable. Well, Sharon's going to have more disaster. She does have much more information and experience with disaster loans than I did. But so mine would be a reasonableness test. And I think having this, I know of one business I've worked close with. It's gonna kill our year. Our year is the summer, and we're burned till next year. So I think it's reasonable. Sharon.
So this is just the way the system is working now, and it's different from when we first started this entire conversation. 2 weeks ago? You're going to submit some stuff for the EIDL advance through that portal. They are going to come back and ask you for information. They're going to tell you how much money you qualify for. You may be able to discuss it with them and give them other information to support it, but you don't go in saying, this is how much I want.
Right. But you can build a case for a higher amount by presenting your information appropriately. Yeah.
Absolutely.
Yeah, but it's not a specific loan request. You don't go and say, I want $50,000. You put together your documentation showing what you think your damages are going to be.
Okay, this person is wondering if seeking unemployment would harm their chances for loans or grants. They are a solopreneur. There also is asking if a one-person corporation is different from a 1099 or LLC category.
So
I would say,
yeah, go ahead.
I would say it will not harm going for unemployment will not harm the grants. For PPP, you're going to want to hire yourself back to the company to qualify. For the EIDL loan, you're showing economic injury. I still don't think that it will harm you. Dan, do you disagree?
No, I don't think so at all. Again, it goes back to the point about not double dipping. If they give you money to put yourself back on payroll, go back on payroll and stop collecting unemployment. But there's an interim period you're dealing with right now.
I'm sorry, there was a part 2 to that question.
It was asking if there's a difference between sole proprietor, LLC, one-person corporation. I guess, how is that factored in?
Well, there's a legal and there's a tax difference, and so there's a structural difference in how you'll have to report and how you report income and what documentation you have. So you have to. Is there a difference in terms of eligibility for these programs? My answer is no. These programs are eligible to all those businesses. It's really going to become how your reporting goes through and how you provide documentation.
Okay, so this person is wondering the time frame for PPP. So they know that you have 6 months to decide on EIDL, but is there a time frame on PPP in terms of the decision?
I have not heard that. It's going to be quick. This is supposed to get you through the next 2 months. The intention of the program is to get you through the next 2 months, and they're not going to make you sign at that minute, and I have not heard a specific time frame, but it's going to be quick. They're not going to hold that money open for you if somebody else needs it for the next 2 months, because that's when it's intended to be spent.
All right, I'm trying to get through later questions, so it's taking me a little bit.
No problem.
So it's saying, which loan do you think an independent contractor or 1099 is best to apply for? CARES Act with job attachment, or is this what the employer should do? Which I guess we already covered. The employer does not do that for 1099s. But what's best for an independent contractor?
It depends. It's a math calculation. You can file for unemployment and you'll be eligible for this $600 per week care enhancement through July 31st. It will end. If you apply for PPP and are approved, you can get 100% basically funding of your salary for 2 months, plus a little additional for rent and utilities. So it's a math calculation based on how much you make and what other factors might be involved. So.
Want to do one more, Jamie?
Sure. Let's see if I can find a good one.
Like a quickie. A quickie. We've got 2 minutes.
No, the answer is no.
Yeah. I feel like a lot of these you've already answered.
Yeah, well, if there's any that you find in the questions, or if someone didn't get their answer and we missed it, we are here for you. If you want individual consulting and you want someone to walk you through these steps and you want to have a conversation, you can go to www.boulderspdc.com and fill out our consulting request under the consulting tab. We are doing our best to make sure that everybody's getting, that we're responding as quickly as possible. And we have about 15 consultants right now that are specialists that are helping people get through these loans. Another option for you is we're doing a daily call. Dan has been kind enough to jump on those this morning. I think we're all on the call this morning, but they're at 8 o'clock in the morning. They're on our website. I think it's kind of labeled as a hotline, but it's if you have a quick call, like you're like, I don't understand this application, or can I just ask you this, and then I can finish doing what I'm doing. They're from 8 to 8:30 in the morning, and then we have Spanish sessions that will be starting on Monday, from Mondays and Thursdays at 4 o'clock. Again, everything will be on our website. You'll get a recording of this call. And then if you've signed up for this series, we're going to invite you to keep going if you want to attend the next series on Wednesday, which I haven't come up with the topic yet, but we're working on it. If you have ideas of things that you'd like to discuss or you need help with, let us know. And there's some great resources on our website as well. If you are not in Boulder and you've dialed in from somewhere else in the state, again, just know that everyone's working so hard. All of our SBDCs are there for you, and so reach out to your individual SBDC, or if you have that quickie, you can call our line too. Whatever, we're all working together to pull information. So at that, it is 11:30, and we will stop on time. And thank you, everyone. Thank you, our panelists. Thank you, Jamie. And we'll see you next time.
Adios.
Take care.